the best of Money Matters.
Market View on Money FM 89.3.
That's right. You're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares inched higher as Asian markets traded mixed, so the Straits Times Index was up 0.45% at 4,289 points at about 2:24 p.m. Singapore time, and that's with a value turnover of some 874 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI, as we shared with you earlier, ended further in the green, up 0.71% at 4,300 points. In terms of value turnover, that's 1.82 billion Sing dollars. Now gainers outnumbered losers 329 versus 249. Now top advances for today, we've got for you GMHUSD, DBS and Great Eastern. And in terms of top decliners, we have here UOI, ST Engineering and F Point. Now, in terms of counters to watch, we do have UOB because the bank announced yesterday that its cardholders in Singapore will be able to redeem reward points when traveling in JB, Malaysia. Now, elsewhere, from how US President Donald Trump signed a proclamation to set a 10% tariff on imports of lumber, to how China's Zijin gold soar shares saw as much as 66% in their trading debut as gold prices reach record high. We've got more international headlines in focus. Also on deck, more on the possible US government shutdown. Now, joining me right here in the studio today is Eddie Low, CIO, Maybank Group Wealth Management. Eddie, thank you so much for joining us today.
Thanks for having me, Tintin.
Great to have you. And Eddie, let's start with the US this time around. Trump signed a proclamation to set a 10% tariff on imports of lumber, 25% on items like vanities and upholstered wooden products. Now, the U.S. president also proposing a 100% duty on films made outside of the U.S. Nothing new, but we were just talking off air about the ambiguities involved as well. How have Wall Street investors taken in the news?
Well, I would say that the reaction so far we've seen pretty muted, partly because really the details are pretty scant. Like, for example, we're talking about the films. Yeah. But how do you define films that are made outside of the U.S.? Is it just one scene, or is it majority, or is it, or is it 100%? Right? And this is actually, in some way, it reminds me a bit about the earlier announcement on the healthcare, the pharmaceutical tariffs as well. Similarly, I think the market reaction was pretty muted because the details were pretty scant. Right? But all being said, that we must acknowledge that trade uncertainty has de-escalated since Liberation Day, right? And if you look at things, how things are moving, even though there are still lingering uncertainty, at least I think for most of the economies except China, which is still on a truce, we are looking at about between 15 to 20% of tariffs, right? So on average, U.S. tariffs, we think we will land around that level, right? Which means it's actually still significantly higher than pre-Liberation Day, because before that it was just 2%, right? So that is actually having some impact on the U.S. economy already. We are seeing weaker jobs market. We are also seeing CPI inching higher. But for the Fed, I think they are really focusing more on the weaker jobs market. And they think that the CPI increase, the inflation increase could be transitory, and therefore they are actually embarking on this Fed rate cut, resuming their rate cut program since September and anticipating more to come.
Don't mind me asking this. Do you think that we are seeing more sectorial tariffs, you call it proposals or tariff threats now, because the legality of the sweeping blanket tariffs on countries is being evaluated?
Possibly. And that is something, that is also a lingering uncertainty, because I think the courts have ruled that Trump's tariffs are actually not legal, and then now it's actually being appealed, and they are still here to stay until we hear further decision from the Supreme Court. So I think Trump administration could be looking at other avenues to try to implement tariffs from other ways instead of what he has been trying to do.
And talk about uncertainties, Eddie, that possible U.S. government shutdown continues to weigh on investors' minds. Congressional leaders from both sides, Republicans and Democrats, they met President Trump in a bid to find a breakthrough before a deadline tomorrow. But it seems like large differences persist. Shutdowns, typically, they are not painful to investors. We've talked about that in prior years. But could it be different this time around? And what would this mean for market participants?
Well, I guess if you look at this time round, the Democrats really wanted Obamacare. I know what the key differences was actually Democrats wanting the Obamacare tax credits to be extended. So there is a very good chance, I was just reading that maybe 70% chance that the government will be shut down on Wednesday. Right, but having said that, as what you pointed out, this is not the first time the U.S. government has shut down, and probably not the last time. Right, the longest period of a shutdown, if I recall correctly, is 35 days in 2018. Right, and so we think that the shutdown of a U.S. government, probably will have limited impact on the U.S. economy. But this time around, I think what is interesting is because we have jobs data coming up.
Yes, Friday.
So BLS already said that if the government were to shut down, they would not be able to release the non-farm payrolls. So what this means is that US Fed, because they rely on jobs data they track it quite closely to determine their Fed rate decisions. So they may be missing out on that part of the data that could actually, somewhat influence their subsequent decisions. Right. The other consideration that markets may be watching is because Trump actually threatened that if the government to shut down, that there could be permanent layoffs of government officials. And that could trigger even softer jobs market, which in some ways may not be
that
bad for Trump because he wanted lower rates. So weaker job markets, Fed will cut rates more, and then Trump is happy.
So a lot of moving parts as we speak as well. I suppose we'll get more clarity on that U.S. government shutdown, if I'm not wrong, tomorrow. Is it 12 p.m. Singapore time?
Yeah.
Around there, right?
Around there.
Yeah, but going back to the Singapore stock market as usual, Eddie, how did the STI fare today, and any surprises if we look at the biggest movers?
I would say Singapore today is slightly higher. The large caps, banks, REITs did pretty well. I think that is actually consistent with the upward trend that we have seen for Singapore markets throughout this year. And I would say that the investors are really quite encouraged by Singapore, or really positive towards Singapore on two fronts. One, Singapore is perceived as a safe haven, so we are actually attracting a lot of safe haven flows into Singapore, including the equity markets. Plus the fact that obviously MAS have actually rolled out this program to revitalize the stock market. And what we are seeing here is actually over the past, I would say, 3 to 6 months, there has been increased listing activities.
Yes.
Right. Even including some potential dual listing of U.S. companies into Singapore. And then obviously the introduction of new indices as well that focuses on small to mid caps. I think all in all, this will this will actually help to improve the liquidity of stock markets, Singapore stock market, which will be seen favorably by investors, especially those who are looking to actually participate in the MAS EQDP program funding. So, which means that, you have a greater diversity of stocks to invest in beyond just Singapore banks and REITs.
Now, zooming in on some of the companies to watch, this counter is a bank as well as UOB. I know you're coming in from Maybank, but where UOB is concerned, and announced yesterday that cardholders in Singapore will be able to redeem reward points when travelling in Johor Bahru, Malaysia, which is a first for a local financial institution, comes as UOB Singapore credit card customers have increased cross-border spending in Malaysia. Now, without commenting on individual banks, Eddie, since you're coming in from Maybank, what would such cross-border spending mean for the local banking industry?
Well, what I can say is, I don't represent the card department from Maybank, but what we can say that we do recognize the potential of these increased cross-border activities. And if I'm not wrong, our card colleagues also have similar programs to capture this increased consumer spending. But I think within the consumer space, it's not just about cards. We are actually looking at ways and means to capitalize on the increased activity, be it in terms of account opening, payments, transfers. And beyond consumer, we are also looking very closely at this new initiative, the Johor Singapore Special Economic Zone. Talking about family offices, helping wealthy clients set up family offices in Forest City. But at the same time, beyond consumers, SMEs, trying to facilitate their businesses' expansion within that special economic zone. And I think that the special economic zone is a very good example of increased regional partnership. Because as we all know, due to President Trump's trade tariffs, existing trade agreements have been challenged. But at the same time, we are seeing also the formation of new trade alliances, such as the Johor Singapore special economic zone. So I think this will help to mitigate some of the negative impact of the trade tariffs. And we do see potential for greater intra-regional trade and partnerships within ASEAN.
Now, if you're just tuning in, we're in conversation with Eddie Low, CIO, Maybank Group Wealth Management. And Eddie, across the region, shares of China's Zijin Gold International rose as much as 66% in their Hong Kong trading debut today. And that's after the firm raised $3.2 billion USD in an IPO, the largest deal of its kind globally in 2025. Now, the movement's, of course, boosted by gold prices hitting a record high today. What do you make of investors' response to Zijin Gold International, and how far are gold-related equity counters a bright spot for investors?
Right. I would just say that I think the first comment was that Zijin Mining really timed their IPO really well because you have a combination of the revival of interest in Hong Kong, China markets, plus obviously gold price going higher. So within Hong Kong itself, we have actually seen also, like Singapore, a resurgence of IPO activities. And some of the early IPOs have actually done pretty well as well. Right, and if you look at some of the subscription for Zijin Mining, I think they will overly subscribe, both on the institutional front as well as the retail front. But back to gold, obviously gold miners, they will benefit from higher gold prices. Gold prices have actually hit 3,800 per ounce. Yeah. Obviously, gold to us has been time tested. It has been a time tested hedge against political uncertainty, geopolitical, and geopolitical uncertainty as well as growth uncertainty. But at the same time, we are also seeing increased demand from central banks around the world, actually since 2022, on the onset of the Russia-Ukraine conflict.
Wow.
So central banks are actually looking for ways and means to diversify their reserves, especially those in US dollar, into gold. So we've actually seen increased buying from these central banks, including those of China. So China's reserve, gold reserve, has actually been climbing up steadily over the past 3 years in tandem with higher gold prices. And we think that structurally, the central bank demand for gold will lend support to gold prices, right? And if you look at the central banks around the world today, as a percentage of their total reserves, gold is still single digit. So there's still more room for them to grow. But back to the gold miners, obviously they are a leverage play to higher gold prices. So they will definitely benefit from gold prices. But one thing to bear in mind is that for gold miners, they do bear additional execution risks.
Yes.
Because so sometimes not all companies will track exactly to the rise in gold prices because of the additional risk. So that's something that investors may want to bear in mind.
Do you think gold will hit 4,000 USD in the very near future? We're talking about months here.
Well, we were actually, I was just at the Clan seminar last week, and we were talking about 4,000 potentially by first half of next year. But looking at the momentum, it looks like we could be reaching that earlier.
And further away, Eddie, seems like some positive news out of Boeing. I don't know if we can call it positive news, because Boeing is reportedly in the early stages of developing a replacement for the 737 MAX. What do you make of the move, and could this help Boeing recover from the slew of developments we've seen of late? What would this mean for plane makers and airlines as well?
Right. I would not comment on the specific investment merits of Boeing itself, but we all know that, many of the incidents that we have actually seen over the past few years, I think the Boeing planes have been involved. So having this new model, I would say in some ways could help them recover from some of the challenges from these incidents. Right, but what I've read is that, as what you point out, this is early stages.
Very early stages.
So it will still take quite a fair bit of time and investment to get the new model out and get it approved out onto the markets. Right, but if they are successful, obviously, to the airline industry, the closest competitor is actually Airbus, right? Yeah. So Airbus will be watching very closely to see if Boeing is indeed successful, and they will have to find ways and means to mitigate against this competitive threat. But another area that we may also want to look out for is the emergence of new players within the airplane making industry. I think in particular China's COMAC.
Yes.
Right, because I think they have been focusing more on the domestic market, but like many other Chinese sectors, including the EVs, I think the Chinese makers are also looking out beyond China to the global markets to really expand their reach, and also I think it will serve as a new growth channel for these producers.
I think an interesting point is to look at whether the duopoly will change, right? Because recently I think we are starting to see new players, even like Embraer coming in, becoming more prominent. So I suppose lots to watch, and when markets open, we shall see what happens to Boeing. Thanks so much for the insights today, Eddie. That was Eddie Lowe, CIO, Maybank Group Wealth Management. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.